Menendez of New Jersey is recognized.
Thank you, Mr. Chairman. Look, FEMA's risk rating 2.0, the agency itself says that 80% of property owners nationwide will see rate increases, and some of those will be compounded annually over the course of several years. Now, I hear a lot from FEMA and special interest groups that we should keep raising rates on policyholders. The premiums are too low, they need to go higher, but this completely ignores the cost side of the ledger and fails to look within the program for savings and efficiencies that benefit the policyholder. One of the biggest claims or costs to the program is not paying out claims. The real drain on the program, in my view, comes from padding the pockets of insurance companies that bear none of the financial risk. So, Mr. Morstead, for every dollar written of a written premium, how much goes to private insurance companies?
We have 65 of the leading property insurance companies that administer the program on behalf of the federal government, and currently 30% of the premium dollars are provided to them to administer the program.
Thank you. Now, let me ask you this. For FEMA to currently run that program in-house, how much of the written premium does that cost?
So the direct side, which writes about 15% of the flood policies compared to 85% of the policies that are written by the WIO, rough numbers, we can get you the exact numbers. It's about $30 million.
Yeah. Well, looking at it, I saw that, as you said, 30% goes to the insurance company, 20% FEMA has to use to operate it. So that's 50% less than what the insurance companies receive. Why are we paying insurance companies 50% more than it would cost to do it in-house?
Well, the reason why is because it's that's what statute and our regulations allow for. And as you are well aware, the 2012 reauthorization indicated that the agency should look at and study and come up with what's the proper amount to pay the WIO companies based on what their actual expenses are. And while it's taking too long, we are continuing to work on that regulatory process, and we'll eventually look at what the appropriate amount should be to pay the WIO company.
Mr. Chairman, this is an area that we need to look at, because if we're paying 50% more than it would cost to operate in-house, my bipartisan NFIP REACT takes the common sense approach, and it would require FEMA to compensate the insurance companies the same amount it costs FEMA to service the program itself. I think it's fair to compensate hardworking agents at a minimum of 15%, but this 50% is a huge cost, talking about hundreds of millions of dollars. I'm glad to hear the chairman raise the question of NFIP debt and your response. $400 million a year in interest, that's an interest. That's 10% of the written premiums the NFIP takes in. No program could be solvent with 10% debt service. And so our bill also tackles this issue by freezing interest payments and putting those savings into mitigation. And it's fair to say that mitigation has a multiple effect. For every dollar we spend on mitigation, there's how many dollars that we save? It's been studied?
6 to 1, depending
6 to 1. I'd like anything the federal government could do that gets 6 to 1 at the end of the day. So, legal expenses. Policyholders' premiums are also footing the bill for the insurance industry's high-priced defense lawyers. Systemic abuses were uncovered after Superstorm Sandy, where the Nielsen firm capriciously ran up legal defense fees. This led to the NFIP to cover $60 million worth of fees and could have reached $100 million if FEMA hadn't stepped in. One judge called Nielsen's actions reprehensible. Mr. Morstead, why don't we have government attorneys handle these cases like they do in virtually every other government program?
Sure. So since Sandy was put in place, we've done some things to improve the claim handling process. One was we set up an appeal branch that is separate from the claims branch, so that if a policyholder has issue with the way their claim was handled, there's a firewall between the claims handling part and they can make an appeal to the agency, and we can go through that process. We've also put in place a new litigation program where we oversee and manage the litigation of not only those that are written in the direct, but with the WIO. And so we have, we can provide you with the specificity associated with the litigation reforms that we've put in place to address the issues that you've raised.
I think the government should be doing this. Now, may I have, Mr. Chairman, this is such a critical issue to New Jersey. I think what I find even more frustrating is that we call risk rating 2.0 equity in action, when I think this new rating system is anything but equitable. Keansburg, New Jersey, home to just over 10,000 people, nearly 2,000 NFIP policyholders. It's a town made of hardworking families, blue-collar, medium household income, 52,000. It's a town that lost everything after Superstorm Sandy. Under risk rating 2.0, 90% of policyholders in Keansburg would be seeing premium increases in the first year, and the increases continue to compound in years to come. Now, the one thing about insurance, as you know, Mr. Chairman, is that it's about spreading the risk over the widest pool. The more and more expensive this insurance becomes, the less the pool that will exist. And the premiums will continue to go up as there are less people in the pool. Not to mention the rateable losses for communities across the nation who, if you can't sell the property at the end of the day because you can't afford flood insurance, the dramatic effect on a rateable basis. So I appreciate the chairman having this hearing, and we look forward to working with you to try to meet some of these challenges. Thank you.
Thank you, Senator Menendez, for your thoughtfulness on this issue for years. Senator Kennedy from Louisiana is recognized. Yes, Mr. Moore.
May I
of course.
respond somewhat?
Of course, I'm sorry.
So the senator's right. 80% of policyholders will see their premiums go up. Right now, if we did nothing, 100% of them would. There are 217,000 policyholders in New Jersey. They're going to see a decrease in their flood insurance rates at an average of $85 a month with risk rating 2.0. Then there's another 137 or 65% that are going to see an increase on the same level of an increase that they would see if we did nothing. And so he's absolutely correct. We just are looking at the numbers slightly differently. And for that reason, we believe when it's based on risk and the individual property characteristics, that we do have a methodology that is more equitable and fair.
I'd be happy at some time, Mr. Chairman, to go over the numbers. I won't delay my colleagues here today, but there's a real impact for a very large number of people, and it's not only the impact, it's the size of the impact. Thank you.
Thank you.